Good morning. I'm Malcolm Graham Wood, and I'm here at Core London for my CEO interview slot. Today, my guest is Marshall Abbott, the CEO of Arrow Exploration. Good morning, Marshall.
Good morning, Malcy. Good to be here again.
Yeah, great to see you again. There's so much to talk about, and it's nice to see you as we go through the program, and with, as you said, such a fair wind behind you. So I'm going to skip the normal first question about describing what the company is. I think people who watch this know all about Arrow or would like to know a bit more, some of the more technical and more detailed bits today. So
certainly,
what I'd like to know, please, is you've had a fantastic run of horizontal wells. 3, I think you've announced, and 1 which is still drilling. Why don't you tell us all about those just to get the everything started?
Sure. So we initiated drilling horizontally into the Ubaki Reservoir at Carrizales Norte. We had a series of 3 other wells that had penetrated from a vertical sense, so we had a good feel for the continuity of the reservoir. So we drilled the first well. It was originally AFE budgeted at about 6.5 million. From a gross perspective, we drilled it for 4.2. In fact, we're the lowest cost operators in the Llanos Basin. So the first well came on in excess of 3,000 barrels a day. Fantastic flow rate. It's produced in excess of 200,000 barrels to date, and it paid out in 30 days. We then moved the rig over on the pad, as you have yourself seen, to the next cellar. So it's a 25-meter move. Again, that well was drilled and completed using slotted liner. Came on at 3,000 barrels a day. The third well, much the same story. The fourth well has been drilled, and it's on stream now. We'll be releasing those rates early next week in a press release.
So, and the first 3 wells, I mean, these are figures that you had hoped for. When having done the vertical wells, you were telling us that whereas you were going to do you had done a few hundred barrels a day. These were a material step up in size. So, 2 questions that come about from that. First of all, those results were all better than expected, I thought. You were confident, but it was a new game in town, so better than expected. And operationally, as you expected in wells drilling?
Absolutely. So we brought in quite a bit of Canadian expertise in drilling horizontal wells. We have one individual who himself has drilled 600 horizontal wells.
Right.
From the perspective of horizontal drilling in the Llanos, it's in its infancy. So we're ahead of the curve. And as mentioned, we're the lowest cost operator in the Llanos.
I'm going to come back to that in a minute. But you mentioned the word slotted.
Yes.
Now, we've talked about this before. In fact, you've shown me a little gadget that does this. And you've used that and then something different.
So for the first 2 wells, we used conventional slotted liner really to prevent sand production from entering the hole. That has not been an issue to date. The subsequent wells, 3 and 4, we've used complicated valves called inflow control devices. They suppress any kind of water production out of the lateral. So they're very efficient in keeping water production down and oil production up.
And I'm going to come back to water later as well. But stupid question, I guess, but you're going to drill 2 more laterals before the season finishes, yeah?
That's the plan. And so 5 and 6, we'll be moving on to 5 early next week, and 3 weeks from spud to rig release. And then the subsequent 6th well will be drilled. We're expecting longer lateral lengths out of both of them. We use advanced sensory technology to stay in zone 100% of the time.
Right.
We've been very successful in doing that. So we've drilled these wells without a hitch. And then before the year is out, we're going to drill the low-risk exploration well at Baquiano.
I'll come back to that again if I may as well. So just to sum up these the campaign as you have it so far, what has it brought to you in terms of reserves and production increasing? And whilst we're on that, the second part of the question is what you mentioned before. You've got a reputation for cutting the cost of a well every time you drill it. You said
True.
7 and 6 and so on. Even presumably at some stage you get down to a level where you think you've just got it about right. But yeah, are you continuing to save money on that front?
We certainly are. So very proud of our Colombian national staff. They dig and dig for the best deals on service costs. And certainly from a much higher macro point, an example is we have purchased quite a bit of completion pipe, and from one of the major players down there who has $250 million worth of inventory. And so we're getting a discount buying some of that pipe from them.
Yeah.
You may recall 2 or 3 years ago, there was a shortage of pipe worldwide.
Yeah.
They kind of went overboard in their order, and so we're helping them clear the inventory. But that's contributed to the decrease in well costs. More importantly, we're through 5,000 barrels a day. And that's without the last 3 horizontals contributing. So we're pretty excited with that. We're also sensitive to the fact that these wells do decline. So we're seeing 50% decline in the first 90 days, to be expected. And it's a bimodal decline, so it's 50% for the first 90 days, then 24% for the life of the well after that.
Interesting, because I have a question about that later on, but we might as well cover it now, because I think this is an area where the market doesn't quite understand it, because they see people saying it's going to decline by 50% straight away, and then they go, oh, that's the end of the world. But in fact, it's the beginning, really, isn't it? Because I think that, you know, once you've done that, as you say, you get, what, a 25% annual
for the life of the well for the next 20 years.
And by that time, you'll have produced 1 million barrels.
Well, absolutely. So a couple of things there. As mentioned, the first well, we've already produced in excess of 200,000 barrels, which is fabulous. We've also had a independent reservoir model performed by a company called CMG. And they have been given all the data from all the wells we've drilled, the quality of the oil, the quality of the reservoir. The reservoir is fabulous. Multi-Darcy permeability, 30% porosity. They project that we can produce these wells at 6,000 barrels a day. We're not going to do that.
No.
Stewards of the reservoir, as usual, so we're conservative at 3,000 barrels a day. The pumps are basically on idle. The wells flow.
They do.
So it's very strong. The aquifer, as you may recall, is very strong, and that's our friend.
Yeah.
That's the reservoir drive, but at the same time, we're producing a lot of water. And we've taken the steps to dispose of that water legitimately, as we have to. We're going to have 50,000 barrels a day of water disposal capacity.
Yeah, again, I've got a question on that, but we might as well do that, because we've talked about water disposal before. We talked about, I think you had one well drilled for water disposal, which ironically was the one that I saw on site.
That's right.
And then you drilled another one. But you're doing more work on water disposal, aren't you?
We are. So the Carrizales Norte pad has 2 water disposal wells. We have to frack them to maximize the amount of water we can put in there. Right now, they're averaging about 3,000 barrels a day each. And then the well on the RCE pad is doing about 15,000 barrels a day of water. There is still upside movement that can be enjoyed. We're building a pipeline from Carrizales Norte to the RCE pad, and that's going to negate having to drive 45 kilometers with the oil trucks.
Over the river, under the river.
Under the river.
Yeah.
So that is something that will initiate construction in January.
Will that have any positive side effects, or will you be able to drive more easily from one to the other, or is it just going to be an underground pipeline?
It's better access to market because there's an all-season, all-weather road right at the RCE pad, whereas the road we constructed from Carrizales Norte is more or less seasonal. And
I remember,
And this is going to reduce the number of trucks that we have to have, which keeps the community happy. Because we travel in convoys of 40 trucks at a time.
It's a lot of trucks, isn't it? Talking about trucks, I read about a Colombian truck drivers' strike.
Yes, good question. So the Petro government came out and said they're going to stop subsidizing the diesel fuel. And so that triggered a nationwide strike where Bogota was shut down. They were running out of aviation fuel at the airport, that sort of thing. Fortunately for us, with our location, we were able to keep on producing without missing a beat. Other larger companies had to shut in some of their production, waiting for this to clean up. But after 5 days, there was a compromise made, and Bogota is happy again.
But you just slipped that through, and you were okay.
Didn't miss a beat.
Completely.
A testament to our national staff down at Bogota.
Yeah, and I wrote about that when I wrote after my visit last year, earlier this year actually, was that, in that what it looks like a very smart new office, which is a trimmed down from the old offices. You've got a smart bunch of 40 odd people there.
We do.
Really impressive. I was very, very impressed with the people there and so on.
We're very proud of our staff, for sure.
You should be. They're very good, and you sort of gave me access to all the areas, so I was able to go and chat to a lot of them and so on. So it was Choreran,
Right.
Bacchiano,
right.
I call it. So tell me, I'm only having picked up on the fact you've changed the name. You're up to drill next. What's the pronunciation, and what are you going to do?
Well, that's a great question, Malcy. So it was Bacchiano. The ANH, the regulator, came back and said that's already in use somewhere. And so Choreran, you're supposed to be able to roll your tongue. I don't have that capacity. So we're going to change the name once again, and we'll let you know what it is. But right now we're calling it the Bacchiano play.
Excellent.
Which is an extension of Carrizales Norte. And it really just demonstrates the scope and repeatability of the play type we're pursuing. Three-way closure up against a fault, 80% chance that it's full of oil, thick reservoirs that you can drill horizontally. And we're the main players in horizontal drilling now in the Central Llanos.
You know, I was, without knowing what you just said, I was going to say, are you expecting it to be connected? Because it's an exploration prospect. What are the implications? But you've sort of made it into an appraisal already by what you're saying.
Yeah, it's,
you know, and is it like CN where you will, you know, you're going to drill the verticals to have a little look see, or
correct.
and then you'll, if it's what you think it is,
then we have the optionality to drill horizontally.
Right. I'm going to skip one question because this brings me to a question about 3D seismic, which we talked about several times since we first ever met.
Mm-hmm.
Now, I've put that the program has been driven by quite a lot of the seismic
Absolutely.
that you shot. And so two questions are, you know, one, you must be very pleased with what you had, and have you got any more of it, or have you got any more inventory or leads from what you had already, or are you going to shoot some more?
So we have a prospect matrix inventory that shows that we have 30 plus opportunities to drill over the next course of time. If we wanted to bring 3 rigs in, we'd have it all drilled by the end of next year. So we're still contemplating how aggressively we want to be on the activity front. But from the perspective of the Bacchiano play, what we're going to demonstrate there is, again, scope and repeatability of the play type. So Bacchiano is on the same fault as Carrizales Norte. There's 3-way closure up against a fault. The pad is ready and constructed with 5 cellars.
That was only just being built when I was there.
That's right. So it's $1 million pad, and we have the ability to drill horizontally from any one of those 5 cellars and expand the pad at about $60,000 per cellar.
Lovely. Now, you've got this great ability to just mention in the answer to the previous question what my next question is going to be. So the next question actually is about cash. Last time we spoke, you had 12 and a bit million.
Correct.
Now, Marketplace thinks that you've got nearer 14 or 15. So there are 2 questions on that. How is the cash balance increasing? And are you going to use it to hire a 2nd or 3rd rig that you just mentioned, possibly?
So you're correct. Joe has $15 million in the bank. We're cash flowing about
Can't think of anyone better to look after it.
That's right. And he's tough on my expense quarter, I'll tell you. So $3.5 million a month on a single well basis. So we're netting cash on a monthly basis. If we just stuck with 1 rig, by year end, we'd be 19 million in the bank.
Yeah.
We like having a clean balance sheet.
Yeah.
It's been well received by the market, as you know.
Yeah.
But we haven't designed the budget for next year, so we have nothing approved by the board yet, but that'll be upcoming in November. And we'll decide how aggressive we want to be. I think one of the things that's going to govern that is where's oil price going?
Yeah.
So we've also been talking to debt providers to see if we want to be able to fund a 3-well program or a 3-rig program. So we're looking at all the options, but right now, from a prospect inventory, we're going to be busy for the next 3 years on the Llanos Tapir block.
Well, I mean, that's great, and building up that cash can do no wrong in the market, because so many people don't do that. So you sort of again mentioned what the cash or what potential debt will do for your plans for next year, and I think that the market are very keen to find out that, because we're nearly in October. You mentioned you're talking to the board about it at some stage. Do you keep? You're going to keep drilling the way you have been in terms of production.
Absolutely.
And hoping to do that. Mm-hmm. Are you going to up the exploration side of it, or are you?
Yeah, we're going to have a good balance between low risk exploration and development. And getting back to your seismic question, we're going to be initiating another 100 square mile seismic project at the south end of the Tapir block. That initiates in January. It'll take a month and a half to shoot, another month to process and interpret. So we're pretty excited because we have 2D data over that block that shows some very exciting leads.
Yeah. But 3D would...
3D is the only way to drill.
Yeah.
For sure.
Yeah. Talking about reserves, when I was over with you before, you talked about the fact that, especially with the success you were hoping for during the summer, that reserves increase quite naturally because of what you're doing, and therefore whether you have an update, formal update from somebody who has been doing it before on an annual basis, or whether you take the last annual upgrade and increase it sort of manually at the interim stage. Where are you in terms of?
So we looked at a mid-year update on reserves. We felt we wanted to see production performance out of the horizontal wells, which has been exemplary and beyond expectation. So we're going to go with a conventional year-end reserve report. Should be ready by the end of February. And that'll be a very exciting reference point for us.
How do you think people would value the reserves if they were looking at you and saying, it'll be more than the marketplace value of that, although your market valuation has been pretty good?
Yeah, we're still very cheap by every metric we look at, but our 2P reserves today are worth about 270 million, which puts our core net asset value at $1 a share. So we've got room to move.
I think it's interesting that the market will, take slowly but surely taking into account, and therefore you've been one of the most, the most fast-moving plays in the London market, and you've done extremely well. I think that you mentioned the oil price. It gives you scope to be able to alter your plans, I guess.
Of course.
And the more you have in terms of success on the drilling side, gives you the production and the cash flow. And if the oil price comes back a little bit, you are, very, very, very well protected. I think that I would say that was the case, wouldn't you? I mean, it's
at $80, we're netting $55.
Yeah.
Our break-even price would be $25 Brent. So we're a long ways from $25 Brent.
Yeah, a long way.
So we would taper our capital program with respect to where the oil price is. Absolutely.
And I saw Mike Worth of Chevron on CNBC the day before yesterday, and they were saying, because it was a day when the oil price had fallen a bit to something with a 7 on the front of it, and they said, "Do you panic when it gets down below 80?" And he said, "I don't panic at 40." He said, below 40 we have to change the plans. But he said, we're just signing off our investments for 4 years' time. He said, we're looking at what we're going to, he said, we can't be bothered with trying to make a guess at.
With vignettes on oil price.
Yeah, correct.
Yeah.
So, I'm moving from Chevron to Conoco, and I would like to have a quick word on Osso Pardo.
Well, Osso Pardo is our favorite thing to talk about.
Great, because in the past we've just sort of, I keep putting it on the sort of back burner.
Right.
But there's been some corporate activity, which means that things are in the wind.
They are.
Why don't I let you talk to me about it?
Sure.
If I talk, I'll get it wrong.
Well, it's actually pretty straightforward. So Conoco and Canacol what used to be our parent company,
Yep.
own the deep rights for unconventional drilling. As you know, there's a frac moratorium going in Colombia. So the government is in the process of awarding them with the shallow rights.
Right.
Conoco is exiting the country. Canacol is going to be able to purchase their interest and utilize the tax pools. And then we'll be able to cut a deal with Canacol and get approval from the ANH. And not only do we get approval just to drill on the block that we've applied for, but that block is called the VMM2 block. It's massive, and we get to farm in on the whole thing. And there's proprietary 3D seismic over a good portion of it. So we're excited with the evolution of Oso Pardo. We hope to have this clarity in the first quarter. And that in itself, on what we've identified to date, could give us another 4,000 barrels a day. We envision drilling 20 vertical wells or 7 horizontals.
And how far away from your existing areas of operation? You're not out with the
We're not in the wild blue yonder. We're just extending the existing production base that we have there. So we'd step it out gingerly as we move north.
Yeah.
Absolutely. It's very low risk.
And the good thing is you have two former Canacol people on your board,
That's correct.
being able to give you a sort of helping hand as to,
And they were the guys who drilled the wells initially.
yeah,
And we've been, they've been in country for 15 years.
yeah.
We rely on their gravitas to weave our way through the bureaucracy, and they've been very helpful in that regard.
Yeah, I can imagine that that's the case. I'm nearly there. I'm looking at the time. We're almost out of time, and I probably will stick to my normal style whereas I moved away from it in the first question. But the last question is always, where do you see your company, in this case, Arrow, over the next 12 to 18 months? And given that we're in the middle of September, that falls nicely to say, you haven't been able to tell us too much, but you've indicated a lot about the 25 drilling program. So this will take you through to the sort of spring of 2026, where you see the company, 3 rigs, lots of production, bringing in other areas, 3D seismic. It's a very busy old time. Tell us what your thoughts are about the next 18 months, if you would, Marshall.
We're fortunate enough to be situated where we are in the central of the Llanos Basin. It's the most fertile part of the Llanos. There's significant hydrocarbon density. If we just look at a single rig perspective, we'll be drilling a well every 3 weeks. If we look at a 2 rig perspective, we'll be drilling 2 wells a month. It's our goal inside of 3 years to be at 10,000 barrels a day, and we feel that with what we've identified on our prospect matrix, that we have the ability on stuff what we already own to get to 10,000 barrels a day.
So what are you producing at the moment?
Worth north of 5,000 today.
Yeah, so you're up with events on your targets, and your third-year target of 10,000 would look to be very achievable.
In our minds, it is achievable, absolutely. Especially, that's not even counting to Oso Pardo, so
Right.
that's not part of our forecast.
So I interrupted your spiel about the company for the next 18 months, but you pretty much got that, I think.
Yes, so we're comfortable in our skin at the moment. We're happy with prices. As you know, we're rather remote in the Llanos, and as soon as our crude hits the wellhead, fiscal transfer takes place, so we have no transportation risk.
Yeah.
And we're dealing with entities like Trafigura, BP, Octano,
Yeah.
to buy our crude right at the wellhead. So they buy it, or they pay us a month in advance. And then we do a square up at the end of every month.
Yeah.
So it's an excellent arrangement.
That's brilliant. Marshall, thank you very much indeed.
Always good to talk
great
to you,
to see you.
Malcy. Thanks for the opportunity.
It's my pleasure. So, I've been Malcolm Grahamwood here at Core Finance, or Core London, for my CEO interview, which today has been with Marshall Abbott, the CEO of Arrow Exploration. Thank you very much indeed for watching what has been an illuminating discussion, as ever, with Marshall. Thank you for joining us, Marshall, and thank you for watching. Bye now.